Good morning all, May the 5th, 2022 Bulletin. We had very much a roller coaster day yesterday. It looked like we were going to test multi-month yearly bottoms on the S&P, but we rallied, and it's currently a little bit undecided on the sentiment. It could be a potential buy, but currently it's a sell, but we'll get there when we get there. There's the buy. We fell significantly enough, they shorted it, but they're still holding on to their bullish bias, so I'm still very skeptical about the S&P right now. We need a really good flush, and 4,000 will do it. I think that will do the trick. It'll completely wipe out these guys' accounts, and then we can resume like normal activity. So this is the reason why we had a very much roller coaster day. We still need to flush the retail guys out. They're long on average, on a weekly average, on risk across US 30, US 500, UK 100 and DAX as well, the German 40. So they're long all those instruments on an average, and VIX is also very high above the yearly pivot. So that's a concern. Aussie is strong. RBA hiked more than expected, so there's the Aussie Strength, which coincides with the Aussie bubble. That's strong. Recall the US dollar is very strong on the daily, weekly and monthly, so remember that's still going to probably take precedence on trend. So we don't really want to be fighting the daily, weekly, monthly trend, but we could be reversing potentially. We should see Kiwi strength, which is a surprise. Everything else is somewhat mixed. We're still fairly early on in the day. However, they have shorted the Kiwi. Talked about this just now, so I think 4,000 is going to have to do it. It's a long way to go, but that should do it, and that should be enough fear and worry and all those negative emotions. They'll have to exit, hopefully. And if we break 4,000 and they're holding on, then there's something very suspicious that's going on, and it's probably the Wall Street bets Redditor crowd, where they're holding on without risk management. And that's going to be very, very bad for those guys. So if we do breach 4,000 and this ratio is still saying net long, then there's something wrong, and so that it could be those guys that are skewing it. There's gold. That's a lot easier, less choppy. See how we went sell, buy, sell, potentially buy. Gold was just a sell and hasn't looked back since, and they hold on to their long bias, so they went long here and we came down to punish them, so dead simple. Oil is the greatest buy, US 30 is the greatest sell, so that's a worry. They've actually gone long on Dow Jones, and so that's quite a shift from last week. The Treasury yield curve, the 30 is above 3% now, and we've got the 5 and the 10 inverted. That's a risk-off scenario. So I need to talk to you why the 30-year exceeding 3% is important. So the 30-year yield is yielding 3%. The savvy and wealthy investor might decide to invest his money, his or her money, on the 30-year bond or even the 10-year bond, rather than dipping his or her toes into the stock market. 3% isn't actually that bad. If you think about, if you had like $1 million to invest, would you put it in the stock market where you might get a negative return, or 3%? On something that's pretty stable? That's going to yield you 3% on your $1 million. So this is really for wealthy and savvy investors. They'll be looking at the yield curve and what they can get for their investment. If they put $1 million onto a particular stock, that could just go really wrong. Then if they invest in a hedge fund, it might be a good idea, it might not. It all depends what happens in the future. But this is guaranteeing a 3% return on your investment. And so this is why this is important to see. And we definitely don't want these short-term interest rates to be high, because if they do, then they're just going to completely bail the stock market, and then we're going to probably see like a recession or a crash. And we probably are going to see S&P go below 4,000. And yeah, so the 5 and the 10 are inverted, so that's a concern as well. Kiwi yen has given us the strongest heads up regarding S&P direction at 84% probability. So for every candle that goes up on the S&P, Kiwi yen is also going to track or vice versa. So that's quite a good correlation. So if you're not sure what US 500 is going to do, to look at Kiwi yen. If that's looking strong, then that's going to be a good indication with the S&P that's going to be strong as well. Gold was the largest mover at 5%. There's the gold bubble up there. They've really went long on gold, and it matches pound yen's shift towards buy over the last 24 hours. Largest stop loss cluster is AU, which you can see out that bar chart there, that bar sticking out, and that liquidity is at 71.85. The size is quite large, 4.56, so that might be a likely target. We are a high level sell and a dynamic sell, so we really shouldn't be coming up, but these are crazy times and we might just want to come up and get that liquidity and then we can dump. There's a lot of money up there. There's probably a couple of million in retail stops, so if you can get it while you can, that's probably what might happen. Remember, you want colours to agree. There's cross yen agreeing for buy, there's dollar CAD agreeing for buy, gold is agreeing for sell. That's fine, covered that. Fairly risk on, to be honest, considering the craziness that we had yesterday. Whether or not this is going to remain true, probably not. By New York we could be heavily negative. Sentimentally we should be selling off, because the retail guys, the dumb money, are buying, and we don't want them to buy because they're normally wrong and counter trend. So if the counter trend guys are going long, then logically it means to sell. So UK 100 is suffering, but that's fine. Signals were okay yesterday, but considering the amount of ridiculous volatility we underwent, it's not that bad. We could have had a humongous loss, but we had a positive result. So we had a flash crash on the Swedish stock market. According to Twitter, there was someone at their desk at Citi in London, and they were supposed to sell in blocks, but I think it was like a fat finger, and he or her, they sold all at once, and that caused like an algorithmic cascade, and that's what caused the flash crash. So lots of ominous things going on. I'm taking that as an omen personally. Whether or not it was actually intentional or it was a mistake, but they got rid of quite a lot of stock, and whether or not that was on purpose, we don't know. It could have been on purpose, just to get them out of a bad position. So that's that. So lots of stuff going on. All eyes on FOMC. Afterwards it should be a bit easier, and to be careful with the dollar. If we get any signals where I've got dollar in the cross, do be careful, because we could see a massive roller coaster tomorrow. And I think these guys are looking for Powell for direction, and whether or not he can rescue them is unknown. It's an unknown variable. He might do. He's quite good at reassuring the market, but then again we should be falling because of the sentiment. So just trade carefully, always know your exit, and try and stipulate your risk to reward as well. And if you can get a 1-to-1 risk to reward, that's still okay. It's not fantastic, but as long as you're obeying your risk management, and you've got to just always got to be careful. This is probably the most volatile week we'll probably undergo in a long time. So because it's the QT and the QT announcement. So let's see how we go. Trade safely, and I'll be back tomorrow. No other videos today. I did 3 videos today, but just the one today. And have a good day, and I'll speak to you soon.